Hello, everybody. It's Joe Fahmy. Thursday, May 28th. Doing a video with a great group of friends of mine. We got JC Parets at All Star Charts. We got Frank Zorrilla at Zor Trades, and the one and only Jon Najarian at Hulk Hogan on Twitter. I wanted to put this video together. These are some great friends of mine that we've had amazing market conversations. There's a lot going on in the market, so we just figured we'd get together. Everyone's got their drink of choice. And if JC, you want to kick it off with, you kind of put together an outline of, maybe state of the markets, or what do you want to talk about?
I'm drinking a Sonoma Coast Pinot Noir, throwback to California, Mr. Jon Najarian. Representing. I don't find myself drinking too much American wine these days, but when I drink Pinot Noir from America, it's got to be Sonoma Coast. So shout out La Crema.
Are you drinking right out of the bottle?
I got a nice glass of wine here, nice and fancy. All right, so that's me. I'm drinking a Sonoma Coast Pinot Noir. I like the cool climate. All right. So I think, this is like a Joe Fahmy. Like, I think of you, Fahmy. Like, when I see stocks like this breaking out to new highs, like, I'm like, oh my God, Joe Fahmy must be like all in right now. Haven't heard from him in weeks. He's in heavy because this is a Fahmy market. Like,
what are you pulling up? What is this a chart of?
So on top, we're looking at the internet stocks. Again, a Fahmy sort of sector. We're looking at cloud computing at the bottom. And these things have been rippers. These are, like I say, these are like Momo names, making new 10-day highs, 21-day highs. These are Fahmy stocks. I mean, like through and through is how I think of it. And, the question is, all right, are now we retesting these former highs? And now we're going to struggle, which we've seen a little bit of churn and some potential rotation into other areas. Or do these remain the leaders? Technical analysis doesn't give us all of the answers, but I think it goes a long way to asking the right questions. And I think this is a big question to ask right now.
Okay. John, we'll go to you next. You obviously are the master in the options activity. You follow a lot of the flow. I hate to ask such a broad question, what do you think of the market here? But what are the, first, few thoughts that come to your mind about the current market?
Joe, it's still true that a man with a briefcase can always steal more than a man with a gun. And a man with access to Congress or the president can probably steal more than a man with a gun. I mean, we were up 210 points, Joe, and then we flipped around today when the president says he's going to have a meeting tomorrow and talk about China. China.
Soprano sit down with China.
Yeah, Soprano sit down. We'll see what ends up happening there. But I guess overall, Joe, I'm looking at, the VIX. The market was whipping around, but a lot of people would be, the bears, I'm sure, would be surprised that the VIX is still under 30, and the bulls would be surprised that it's not 25. So it's probably right where it should be, Joe.
Okay.
Not that you asked about the VIX, but I'm just throwing.
No, I want all the option stuff because this is stuff you follow that you're way more versed in this stuff than I am.
So. We got a lot of guys coming back into this stuff. I don't just mean the VIX. I mean, it seems like, and I think Zor would be a great one for this. A lot of the institutions that had been hanging out, not really putting in a lot of big trades, have started to come. You saw it with the rotation that kicked off 2 days ago, and now you're seeing it still with a massive amount of rotation out of certain sectors, Joe, into these, banks and tanks is what Tony Dwyer called them. And yeah. I think he's right. So I'll throw it back to you.
Yeah, so I do want to come back to you in a bit with the CBOE stuff because I do have some questions on that. Zor, let's turn it to you. Any sort of things you're seeing in the markets? Any sort of, just commentary or whatever's on your mind?
Well, I think in the short term we're overextended. Short term meaning 10 to 15 days, right?
Okay.
I think the bulls and bears are better off. Well, at least the bulls are better off with at least some type of consolidation for the next 10 to 15 days. I don't think this whole thing of going up every single day is going to last too long. And what usually happens when you see that is that you tend to give up 2 to 3 weeks worth of gains in a matter of 2 or 3 days. That's what usually happens. We'll get a quick flush out, and you'll lose two weeks worth of gains. As far as what John said, what we've seen over the last couple of days, we've seen the banks start to rally. We started to see all the beaten down names, CCL, the cruise ships, the play, the things near the bottom start to fly over the last couple of days. So again, I think in the short term, we're just too, I think it matters where we come from. And we're up 35% in a matter of 2 months. We're gapping up every day. You have stocks like DraftKings that are now pretty much going parabolic for whatever reason. And I think that leads to a short-term pullback.
Yeah, that would make sense. John, I just wanted to ask you something, because the one thing I do follow in the options market is the CBOE, put to call ratios, and especially the equity only, because that kind of gives you a feel where the index could be a lot of hedging, but the equity only, and I wanted your opinion on this, could be more directional plays. And I've noticed it's pretty low. Is that, 0.5, 0.49, 0.55, which is on the low end, and it's coming pretty consistently. What is that telling you, that retail is just a little too frothy with the call buying, or is that something you even pay attention to?
Great question, Joe. And, whatever we're discussing here, folks, is all off the record.
Of course.
Even though it's recorded and out there in the world now, but it's not off the record. What I'm seeing all the time that makes no sense to me, Joe, is that we get somebody on from TD or somebody on from Schwab. I have nothing against either firm. They're all obviously consolidating into one firm. But for some reason, Joe, they think that I care what the customers of TD or Schwab are doing. And I don't. And I don't think anybody does. This is what I'll throw out to you guys who are all professional traders, is that even us as professional traders, I don't give a damn what we're doing, because we are, less than 20% and probably down around 10% of the trade, Joe. So
Yeah.
The real trade is still, and has been for, forever, in the recent terms of Frank's comments, when he says, well, 10 to 15 days, for at least 10 to 15 years, Frank, it's been all HFTs, high frequency trading, algorithmic trading, and the like. And they account for, Google it, folks, 80% plus of trades.
Yeah.
So do I care what 20% of those with much smaller accounts are doing, or do I care what the 80% are doing? And my mom didn't raise too many dummies, Joe. Maybe my brother Pete, but certainly not me. And I'm kidding about Pete, of course. Much smarter than me. But
Yeah.
I want to follow the 80%. I want to know, where that money's going. And to Frank's point, if we start to see a tail off in volumes, block trading, any of the things that I associate with institutions, that's what I care about. I don't care about that everybody's piling into Apple, because I know not all the HFTs are piling into Apple, Joe. And just as they tell us that on Tuesday after Memorial Day, that everybody's piling into Apple, all they care about are the FANG stocks. Everybody flips, and all of a sudden they don't give a shit about that. All they care about is JP Morgan and Synchrony Financial and all of the
energy financials, the beaten down stuff. Yeah.
banks and tanks.
Fahmy, if I butt in, am I going to get
No,
beat
please
up by
go ahead.
Najarian?
I just wanted to say real quick, I'm not going to make fun of Pete either, because I don't know, I don't want to die, so we'll just leave that alone. JC, go ahead. You're going to make a point. Go ahead.
No, I don't want Zor to throw a baseball at me, if I say the wrong thing. John's bigger than I am. No, I mean, I think Zor makes a good point. Some of the garbage stuff has been working over the last couple of days, and I'd argue even longer. And to Najarian's point, he's talking about how the institutions are controlling these. And Fahmy, you always laugh because I always repeat your stories. You have this story about how you got this guy at Fidelity, and when the market's getting crushed, he's saying, come to Papa, right?
Yeah.
What's going on there is rotation, sector rotation. The institutions that are taking advantage of underlying weakness, particularly on a relative basis, are stepping in. And that sector rotation really is the lifeblood of a bull market. Not to mention, everybody's focused on what's the S&P doing, what's the Dow doing. We can be in a range, and the big tech stocks and discretionary that have been outperforming rotate, and then the banks and tanks that Dwyer's talking about, that John was just mentioning, that's what I think is really interesting. So I just have a quick graph to show you. It's got all sorts of pretty colors and everything. But what I want to point out is that the second column here ranks all of the Dow Jones industry groups by the performance over the last 2 weeks, okay?
Okay.
And if you notice, the best performers, aluminum, freaking airlines, tires, hotels, furnishing, these are the same sectors that are the furthest from making new 52-week highs. In other words, the sectors with the biggest drawdowns are the best performers over the last couple of weeks. So it's just a really interesting question. Is this the rotation that we're looking for to say there's something more substantial? And I think that the market is sort of proving that that's exactly what's taking place.
So the big question is this a temporary rotation, or, you know, because I know sector rotation's been going on over and over, and that's what keeps a lot of the averages propped up. Is this a temporary thing and just a, you know, mean reversion, or is this something you think can happen for a longer time?
Even a mean reversion could be really substantial, right? Even a mean reversion on a relative basis, we get outperformance from freaking transports and financials. Like, I mean, the tanks and banks, I had never heard that. It's fantastic. Props to Dwyer. But he's right. Like that, you know, regional banks, small caps made new multi-month highs relative to large caps. We're seeing rotation there. Like, these are things we haven't been able to say in a long time.
Well, real quick, JC, one thing that you do that I don't do is you look at a lot of global ETFs to give a feel for what's going on. No offense to people in, you know, Peru and Vietnam that are listening in, but I don't really pay attention to all that stuff. But what are you seeing when you scan through 30, 40, 50 country ETFs? Because, you know, I know you have more of a global picture than I do. So what is that telling you?
I'll show you I mean, you want to know what it's telling me? It's telling me the exact same thing. Who are the ones doing the best? The ones that have gotten killed. Latin America are performing over the last couple of weeks, right? The worst performing. So the same thing we're seeing in the sector rotation, we're also seeing internationally, which is, it's telling a similar story. What Zor was just saying, the garbage, the stuff that's done the worst is the stuff that's now shining. Look at over the last 2 weeks, the best ones. Nigeria, right? Not exactly flight to safety. Freaking Turkey, Argentina, Ireland, Poland. Like, these are the best performers over the last couple of weeks, and they're the ones with the biggest drawdowns.
Yeah, I had turkey for lunch, so I'm a big fan of turkey.
What'd you have for second lunch?
I'm still on it.
Second lunch, I like that. I caught it.
Lunch. I can't wait till
It's a Lord of the Rings. That's a Lord of the Rings.
I can't wait till we can all get together again in New York and have a big steak or something. Zor, you I know you like to look at a lot of the small caps and you know, trafficking a lot of small and mid cap stuff. I mean, I don't know if you have any comments on what you're seeing there, because I know that's sort of a feel for risk on in the markets when the institutions are putting money into there. I don't know if, you know, if there's something you're seeing there or.
Look, I think a lot of it depends on your time frame, right? So the way I look at things, like JC said, the beaten down names are garbage, right? I don't think they're garbage because of my time frame. If I had a short-term time frame, a 20% move in the stock is the same to me, whether it's trading at a 52-week high or a 52-week low. And all I want to do is take advantage of that burst. And and to me, it doesn't matter if it's in the middle, the bottom, or wherever it is, because there's an opportunity there. What it means for the broader market, I think that I could be wrong, but usually the market tops when everything is participating. That's what I believe.
Yeah.
So if you go back and you take a look at the stocks above the 50-day moving average, you're normally peaking when everything is going up, including the Russell 2000. Just like, for example, when do we normally peak? We normally peak, we'll have a short-term high when everything's going up a lot. When you have stocks going parabolic, like we did, for example, at the beginning of the year, we had Tesla and we had a few others. So again, long-term, I'm always bullish. Long-term. Short-term, I think there's an opportunity here for a small pullback.
Yeah, no,
after such a huge run.
the Russells run up from what 1,000 to 1,400. I mean, 40% in a short period. I mean, I think you're right. We could see a pullback. The other question I have for you, Zor, is you posted a video a few days ago of you taking jump shots, and I think you hit like 27 in a row. So my question is, who do you use as your video editor? Because I need to use that guy.
Ooh.
I need to use that guy. That guy should
Oh,
guy should get an Academy Award in video editing.
right.
Oh,
Yeah.
that was amazing. I don't know if you saw it, John, but he was at the gym. He drained it was like watching Steph Curry. It was pretty cool.
Well, that's very cool. And like I was just talking with somebody else that was saying, "Hey, John, you played basketball with Prince, right?" And I did. And then they said, "You played basketball with Dr. J and with Magic Johnson." And I said, "Yeah, I did." And I said, "And I suck." I said, "The only reason I played basketball with Prince is I went to high school with him. The other two guys, it was, some sort of charity thing, and I'm out there on the court with them, not playing a game, not at all. It was just like I'm wearing my trading jacket, Joe, and it's like I'm trying to back him in and then jump up and jump backwards so I can take a shot without it getting slapped in my face, right?" So,
Nice.
But yeah, I'm impressed, Frank, because like I say, I am not that basketball player.
Those are
Right, and Joe,
the
that-
Space Jam guys, the Space Jam editors. They handle that.
Right. Yeah. And Joe, that video was more about trading, right? Where you have a lot of traders that don't accept the fact that you're going to lose half the time.
Yeah.
And that one trade has nothing to do with the other. So if you had 3 winning trades, it doesn't mean the other one's going to be a winning trade, and also vice versa. So that was the point of the video.
Yeah.
But I'm not gonna bet anyone whether I can make one shot. I'm gonna bet you that I can make a series of shots. If you give me 100 shots, I'm gonna make 80. I wouldn't make a bet just doing one trade at a time. And that's what most people do nowadays, that they're putting their entire account into one trade, like a lot of newbies.
Yeah.
So that was the point of that video.
Okay. No, there's a lot of correlation with trading. I mean, I think that maybe this can lead into a little of a psychology discussion. I think trading's 80% psychology and mental. I don't care if you give me the greatest trade on a silver platter and the market's in the greatest, trend or whatever. If your head's not right, you're going to have trouble. And this is a part that I love talking about. If you're going to have trouble doing well, if your head's not right and you're dealing with other, whatever it is, stuff in your life. And I don't know if anyone has any sort of, I mean, John, you're a professional athlete and, I'm sure you understand the mental toughness more than anyone. How does that apply to you when you're approaching your trading as far as the psychology?
I think, Joe, it's really just the same thing that makes all 4 of us successful, and it's discipline. To Frank's point, yeah. You guys, I know, Frank, that Joe and JC have heard me say this before, but Twitter can be such a cesspool because I'll talk about a winning trade, Frank, and then I'll have, 30 whatever amount of people that'll come at me and say, "Yeah, that was great, I did that." And then I'll have like 2 people that'll come at me and say, "Why don't you post your losers? You're a fucking fraud. Post your losers." And I'm like, dude, do you think you're a marketing genius or something? I don't post all your losers. I mean, my losers are out there for everybody to see. If somebody wanted to go back, and I can't stop them, they could go back to the tape, on CNBC. They could go onto the website and see, let me Google Najarian and see what he said about unusual yesterday. See how that, it worked.
Why do your haters have surfer dude voices, though?
Yeah, but they don't all work, right? We all know that. So, Joe, the biggest thing, discipline. Having the losers and having the discipline to take profits on the winners. Because none of the 4 of us, I bet, would ever just let it all hang out and just let that winner run forever. Because we all know it's going to end. Frank said it already. If you see, a several week period of we're up, and you don't pull any off, in 2 days you could see gone like that. Happens all the time.
Yeah, I think it's amazing that people don't understand. I mean, we're all professionals and we have tons and tons of losers, myself included. I just try to keep it to a minimum. Hey, if I can make, I know the rough math. If you can make 20% on one trade and lose 7% on the other 2, you're only right on 1 out of 3 trades, but you can still grind out a small profit. or if you have an option trade, I know the numbers are different. If you're day trading, option trading, you've had some nice 200-300-400% winners. You have to make up for a few that are expiring worthless. But the fact that people think that we don't have losses, I can't blame. I mean, I don't know what else to say. That's not my problem if they're that gullible.
Hey, Joe, you guys got to look at the group chat because I threw two things in there that we should think about talking about.
Okay.
One of them's Dave Portnoy, from Barstool Sports.
Love him.
Because, here's a guy that's single-handedly bringing back day trading. You know what I mean, guys? I mean, day trading, Dave.
Like late 90s shit.
Yeah, and I'm not a hater. I really am not. I love that this guy got paid because he worked hard, made a great business, got paid. He's still grinding. And yet he takes whatever, $5 million, says, I'm going to compete with Joe. I'm going to compete with Frank and John and JC. Great. I mean, people need to see that somebody out there looks at it and says, here's my real trades, transparent all day. Just watch me do this. And, warts and all, he does it. I love that.
I think he's incredibly entertaining. Go ahead, Frank.
I think the funny thing is, I don't think he realizes that the amount of education that he's providing to people, because he's going through the emotions. I saw a couple of videos where he's saying, I can't get anything right. I buy this when it goes down, this one I don't buy and it goes up. These are the same emotions that every trader goes through. We've all been there.
And I don't think he
and I don't think he realizes that the education that he's actually providing to all these people, which he is, just by putting his emotions out there. Because we all go through that.
Yep.
For example, I don't take this trade and it goes up. This one I size up too much and look what happened.
Yeah, we all deal with that. It's a constant struggle, and we just got to try to minimize our our mistakes. I think he's entertaining. Some people take it too seriously. It's just fucking social media. It's not meant to be taken seriously. I think it's hilarious. I think it's entertaining. And to Frank's point, if you actually, as a trader, and listen to it, it's some great lessons in there.
Yep, I agree.
I think it'll all come down to the same thing. We've all been there. We've all read the Market Wizards books. They all have different strategies. They all have the same conclusion: risk management. Doesn't matter what the strategy is. And I think that the whole Portnoy thing, I don't know if he's realized it. I don't really watch that much of it. I've seen some of it, but I hope that the lesson is the risk management aspect of the whole thing. And if he makes a big deal about that, and I encourage him to do so if he's ever watching this, or if you could pass this message along, I think he's probably already gotten to that point where he realizes that's really all that matters. And if he has realized that, preach that, right? I think
except when he's wearing the T-shirt that says "It's only money." That's the part where I don't think he really cares about risk management.
and I think JC is correct. It's all about execution. So you can probably take all my trades and take all your trades and do the exact opposite. And with the proper risk management, if you're a 50% trader, you could be profitable taking the opposite trades of everyone, because we're going to be wrong half the time. But with the proper risk management, you can actually be profitable taking, the opposite trades. The thing is that people don't accept that you're going to be wrong in this business. That is the problem.
It's ego. They don't accept. It's a lot of ego.
And that's where the mental game comes in. We grow up, like, for example, we can't be wrong. We got to do this correct. So it's hard to change that you're going to be wrong half the time. And what happens is people dive in to do more research, thinking that that's going to help them out. And all that's going to do is give them more paralysis. They'll they go into a trade looking at a daily chart, and if it goes down, they go into the weekly time frame. If it goes down even further, they go down to the monthly time frame.
Now you're listening to conference calls.
You got a day trade where you're listening to conference calls before that. That's my favorite.
But as athletes, we have the advantage. All of us are former athletes. Like, as a baseball player, for example, if you fail 70% of the time.
Dude, I couldn't even keep a straight face. I played wiffle ball with my little nephew, and my shoulder still hurts. So you three professional athletes. We can just
listen. You learn to lose.
I can be the agent. I can be the agent.
The agent.
JC, I feel like you have a chart. Like, I feel like you're just salivating to put up a chart, because I know you're.
Yeah.
I mean, You just, I feel like you're just like waiting. You must have something you want to pull up just to show us.
Listen, you want me to pull up a chart? I'll pull up the dopest chart in the world right now. You want to pull up the chart?
I knew it. It's probably my weight in COVID cases. It's like the same.
Dude, you want me to pull up the best chart ever? And Frank will appreciate this. No, but we have an advantage. I mean, think about it. Not only are we used to failing and we're used to losing as athletes, and we've all gotten our ass kicked or gotten back-to-back home runs hit off us or struck out 3 times, or, you know, we've all been there. And then not to mention like those like early morning workouts, like getting up at 6 a.m. and running in the snow. Like, are you kidding me?
I know what you mean, brother.
My days will never be as bad as that.
Hey, I'm moving to the good stuff now. I just want to let you know. I'm busting out. I'm cracking out. This is a vintage 2020. John's probably got like a 3,000 bottle of like Lafitte he's going to pull out or something.
Oh, not at all. But you know what, Joe? This one will get us ratings. This one will get us ratings. I got the Rocks Tequila. So Terramana, this is a damn nice tequila, really. And so if we tweet it out, when you post this one, Joe, we put it out and we're saying, you know what? There's the Rocks Tequila.
Maybe we'll get a sponsor.
Rocks might retweet it.
Maybe we'll get a sponsorship.
Yeah, come on.
It's good stuff, too.
They'll send you a case, John. That'll be perfect.
There it is.
What do you got, JC? You said the dopest chart in the world. You can't keep us hanging.
Well, I mean, we're talking about risk management. We're talking about athletes, and we're talking about swinging at good pitches and not swinging at bad ones. And look at Ted Williams, one of the greatest hitters of all time. Look at his batting average when he was swinging at bad pitches. But when he was swinging at stuff right around on the belt, you know, he was hitting over 400. But even one of the greatest hitters of all time, swinging at shitty pitches, not managing risk responsibly, is going to have poor performance. It's the same for us.
Yeah. No, I think to John, one of the points you made about institutions controlling the markets, I mean, there's just clear things. I like to just say, let's just say roughly the 50-day moving average, a red light, green light. If we're above that, it's a green light, market's healthy. Below that, to get defensive. But when we're above that and we're in a good trend and the institutions are supporting the markets, it amazes me how many people love to argue with that. And they have their opinion. And I think this past 2 months will go down in history as, and pardon my language, as one of the greatest mind fucks psychologically in the history of the markets, where everyone's watching the news and it's COVID cases and we're all going to die. We're never going to leave our houses and everything's going to suck. And the market has destroyed everybody. And I think it's because they've separated their analysis of the market from their views on politics, social issues, or whatever the news has completely brainwashed them with.
I agree, Joe.
Well, some people have to make sense of, some people have to make sense of things, and that's the issue with the market.
But when does the market ever make sense?
It doesn't. But some people, that's just the way they are. They need to make sense of things. And if you have to do that, if you have to make sense of the market, you're gonna be a perma bear forever. If you actually read the news and try to make sense of what's going on, you're never going to be bullish. Yeah.
John, you were going to say something. Sorry, go ahead.
Yeah. Well, I mean, two things really. One, just because I, saw it live, Joe Kernan and Andrew Ross Sorkin, and they went at it.
That was good. That was good TV.
I couldn't tweet it. And I was so tempted, Joe, but I couldn't because I know both guys.
Yeah.
And I didn't want to appear to take sides. But I liked that they did exactly what Frank just said. There's two different views of America between those two guys. Obviously, one's conservative, one's wrong. No, I'm just kidding.
I love it.
One's conservative and one is liberal. And one sees everything he says as supporting the president, and the other sees everything that same guy says as detrimental to people's health, terrible as far as, you don't care about people and things like that. And I think they both care about people. So this is not my argument. I just think that it's interesting how many people come on TV or in particular, that, they might come on with Sarah Eisen or Wilfred or whomever and say, well, but it doesn't make any sense. The market's here. To your points, guys, it never makes sense. I can never justify, but I can say, well, the usual suspects, fear of missing out if it's to the upside, fear of missing out because most people are buyers, not sellers, and they're cursing themselves because they swore to God if the market went down 20%, did a correction, they'd buy it.
But then it goes down and they still don't do it. And then it went down 30% and they still don't do it because that's where the psychology comes in. There is a lot of fear. There's an unbelievable amount of fear. I get emails all the time, and 90% of the emails I get are fear related. What do I do this? How do I buy this? I'm in the trade. Should I take profits? It's pulling back. What should I do? And it's all about, they're just spinning around. It's not the mechanics. We all know, you can buy Apple, you can buy some great stocks and stick with the trend. I get it, but it's not the strategy. It's the psychology around it.
Mm-hmm.
Most people don't have any clarity of what it is they're looking to accomplish in the market. Everyone wants to buy something that goes straight up. So there's no clarity. That's just the way it is. And most people are, whatever happened in the previous trade usually rolls over to the next trade. So if it was a loser, they're going to hesitate in the next one. If it was a winner, they'll go into euphoria based on one trade. So most people don't have any clarity when it comes to trading as far as retail investor, in my opinion.
No, that's a good point. I also think that 0809 has scarred people so much, and that's 11 years ago, that they think every time the market rolls over, it's going to be a 9-month, 50% decline in the S&P. Because it happened in 0809 where the average bear market, 6 to 9 months, 27%. JC, you probably know all the numbers. I'm just giving ballpark numbers. Like, every year, Frank, what is it, 14.5%, 15% entry year? Entry year drawdown, you told me on your stats. Like, so it's normal to have pullbacks. But when we pull back, everyone's like, oh, shit, it's 0809. This is a disaster. So, John, to your point, when we drop 30%, it's still not enough because they're still waiting for that 50%, which – in all honesty, is very rare when that happens.
Right. Extremely rare. Happened, like you say, Joe, happened in 08, 09. And yet, how many people pulled the trigger at 666 in the S&P?
Yeah.
Obviously, some people
bears
did,
are so cute. It's like going to a petting zoo, with these perma bears. Like, you just like, oh, they're so adorable. And when they say like the funniest things, like you just want to pinch their cheek.
Listen, on that point though, right? So we're thinking about 2008, 2009. However, what about all those new accounts that were opened just recently at Schwab, TD Ameritrade? I mean, record numbers of new accounts, people coming in. And it's interesting to me is because the market, the S&P is pretty much flat for the last 2 years. So back in 99, we had a huge run, people jumped in. The housing market, we had a huge run, then people jumped in, Bitcoin as well. But right now, we just went through the fastest bear market in history, and people are jumping in hand over fist. Now, this whole thing about there's no sports, there's no gambling, it makes sense, but retail investors usually chase something that has already moved. And now it looked like they pretty much caught the bottom based on all the data from TD Ameritrade and Schwab as far as new accounts being open.
Yeah, there is some factor of people, unfortunately, are either out of work or, laid off or whatever, and they're opening accounts and trying to do something. I can't blame them for that. I don't know how much that reads into sentiment because my friends, when the .com started happening in 97, 98, they all opened online accounts and stuff, and that went on for 18 months. So,
right, but that was after a major move higher. That's what's weird about this. Like, for example, every bubble when people actually piled in was already after a significant move higher. I think this one's slightly different where we're coming off a 30% correction in a matter of a month, a tremendous pandemic that's got 30 million people unemployed, and we have this huge amount of people trying to buy stocks.
But it's no money. It's no money. In the whole scheme of things, all of those accounts added up and zero might as well be the same thing.
Well, that's to John's point. He doesn't care about that because it's the big
nothing.
pension funds and mutual funds and
Garbage.
hedge funds. It's not the guys buying, no offense, because if they're buying 20 shares of Apple, I'm not making fun of that. I'm just saying it's the Fidelities and T. Rowe Prices and Vanguards that are buying millions and millions of shares. That's what we care about.
Right.
Let me show you guys one thing quick, Joe.
Go ahead.
Let's see here. First of all, I got to present it. Whoops, I don't know if I said share it yet. Sorry.
Yeah, just go to,
Share. There we go. And now present. All right, so there it is, JC, Joe, Frank. What do you think of that graph? That's a graph from the beginning of the year till now. I blanked out what it is, but you guys probably know. But what do you think of that graph? What would you do if you saw that graph, Joe?
Now you got me thinking what it is.
And don't worry about, it's not as important what it is, but if you saw that and you saw that huge spike and then that sell-off, what would you think?
I don't know, euphoria, and it just sold off, and it probably needs some time to, turn around again. I mean, definitely looks like euphoria.
How about you guys?
That looks like the VIX to me,
Yeah,
right?
it looks like the VIX.
Yep, it is the VIX.
Yeah.
Right, people rushed in.
I told you I didn't follow the VIX, so I didn't know. I didn't see the right-hand side. Go ahead, Frank. Sorry.
Yeah, I mean, look, it looks just like the VIX. I mean, and look, just like Tesla went parabolic before it had a huge downturn, so did the VIX, so did the TVIX, where it hit 1,000 to the almost at a penny.
Yeah.
Right. It's amazing. I mean, it really. I think Tesla hit 1,000 to the penny before it dropped 50%, and the TVIX was the same thing. Yeah, I mean, this is the VIX. Fools rushed in pretty much at the very end. And that's it. They're slowly bleeding.
But what hurt a lot of people in 0809, John, was the highest the VIX ever got to was 60. So when it got to 60, a lot of people said, I'm going to short it or play against it. And then it spiked to 90 back then. And again, forgive me if I forget the exact numbers, but because in my view, there's not enough data where they just said, okay, the highest it ever got to was 60 in history. So when it got to 60, they shorted and they got smoked on the move to 90. And maybe the same thing happened here too. I don't know.
What I think is that nowadays information is flowing so much quicker that we're going to get faster moves in both directions. And I think that's what happened with the TVIX. That's the reason I also, like back in the days, back in the 90s, we had these breakaway gaps where a stock will report great numbers and just go up for, a whole bunch of days. And now when you get those big gaps, it stalls because everyone gets the information at the same time. Back in 1998, 1999, we had the JAG notes where, you would buy a stock that was up. Remember the JAG notes?
Yeah, I remember JAG notes.
Yeah, right. They will come in the morning. So if for some reason you were able to buy a stock at the end of the day, if it was up big, knowing that it'll hit the newsletters that night, you get the facts in the morning, and people will buy it at the open. But nowadays, information is flowing so quickly that things are happening that much faster, and we forget what happened a month ago in a matter of days.
Yeah, I wanted, and any one of you guys can answer this. I wanted to throw out the first time in history, which was the end of January 2018 into early February of 18. Remember the Dow went up all January in that year. It was the first time in history the S&P went from an all-time high to a greater than 10% correction in 10 days. From an all-time high to 10 days. So it happened very, very fast. Now, with this past sell-off in March, it went from an all-time high to a greater than 10% correction in 6 days. I kind of have a theory or whatever thoughts about it. I don't know if you guys...
Right here, 3 days? 3 days, anyone? Going once, 3 days.
I mean, I think it has to do with leverage, but I just think, as people unwind and all the computers, to your point, John, it has to do with leverage, but I don't know if you guys have any
It's forced selling is what it is, right? You have all these algorithms. It's like a domino effect. So that's what happens.
But
and then
to Frank's point, it's never happened this fast in history. 10
it's only going to get faster, though,
in 6
right?
days.
It's not going to get slower.
From an all-time high. So what? Maybe you're right. Maybe it'll happen in 3 days sometime.
Deal with it. This is the occupation.
I don't want to deal with it. I don't like losing money.
I don't want to deal with it. I got one for you, JC. Here's one of the reasons why. Most of the bad stuff in the markets can be traced back to greed, of course, but it's not always the traders' greed. Sometimes it's the regulators' greed. Sometimes it's stuff like portfolio margining right now. So for instance, portfolio margining didn't exist or was maybe this big back in 2008. You know what I mean? And for those who don't know, portfolio margining would mean, folks, that instead of looking at an individual, instead of you just getting 50% margin and you buy a stock, you can get up, somebody, the broker can lend you 50%, unless it's below a certain price and yada, yada. But nonetheless, you've got portfolio margining, which says, wow, as long as you have enough of these over here on this side of your account, Joe, you can offset the losses that you're taking over here. And we'll look at your whole account and say that, well, instead of saying Joe only has the buying power to put on $200,000 worth of stuff, we're saying Joe could put on $2 million worth of stuff.
Yep.
Okay? That's
So
portfolio
instead
margining.
of a 200,000 account with 300 in buying power, now you can have $1 million or $2 million in buying power on that type of account.
Right. And guess, to JC and to Frank's points, guess what happens when that trade's going against you and how fast they have to pull the trigger on getting them out.
The margin clerk doesn't care about your Fibonacci
Yeah, but
retracement.
John, I'll take it a step further. What about a 10 billion hedge fund that's 40?
Right.
I mean, Frank, weren't you telling me James Simons was always 10-to-1 levered in his fund? I mean,
I forget what it is, but they're doing these reverse repos, whatever it is that they're doing, some complicated stuff where they're able to buy a lot of stock with very little money. And once you get that little small drawdown or that little pullback, you have to unwind it, quickly.
Yeah.
And that's so, portfolio margin for a regular account, you got 200,000, you get $1 million. Just think about a hedge fund.
Yeah. What if you got 10 billion that's levered up to 30, 40, 50 billion and multiply that by 100 hedge funds that are doing the same thing?
What about that natural gas guy that was picking up those pennies in front of the steamroller, right? He's picking up pennies. But then when the steamroller coming through, like that turns into a domino effect that is really going to move prices because of that forced liquidation. I mean, that's exhibit A. I mean, how many times, selling, what is he doing? Selling naked puts or something ridiculous?
I think, didn't everyone know his position? So they kind of duke and they cornered the market on him or
Yep.
something?
Well,
Totally.
let me tell you, let me give you a real life example. Back in 98, 99, we used to do this. Let me just rephrase that. This used to be done a lot. JC, maybe you remember.
Hey,
so
I'm the only professional athlete here, so I know what you're talking about.
So back then you had, you would have, like, for example, a biotech stock trading at $5 a share that they were coming out with data a month later. And you were able to sell the options like for $2.50. I remember because I did it with a company called Macrochem. Macrochem was MCHM back in 99, I think, or 2001. They had a topical gel. It was like a topical gel, a Viagra topical gel. So instead of drinking the
all you had to do is rub it on it, right?
Rub it on, right?
But shouldn't that make your hands bigger too?
right, hard, right? So at the time, the stock was trading at $5 a share. This was during the summer. It was May. The June 5 calls were giving you $2.50, which means or $2.10. So if you bought the stock at $5, you put the stock on margin, you had to put up $2.50. You take the call, which was $2.10. You're putting up 40 cents for a $5 piece of paper.
Wow.
So you were able to buy 500,000. You were able to buy 100,000 shares for $40,000. Okay, of a $5 stock. So when that trade went against you, it was over. Then you had to unwind, and you were probably negative equity. So now imagine doing that at a much higher level.
A bigger level. I've always said America's greatest pastime is not baseball; it's borrowing money. It's leverage, man. It's to your point, Frank. It's been going on for the longest time. Even the bucket shops, the Livermore stories of putting up a little and borrowing a whole bunch. Right. It's been going on forever. But to your point, it's just the numbers get bigger and bigger, and maybe that's why we see these velocity type of moves. Or higher.
Also, what about the CTAs? That they're looking at certain numbers, and once they get that number, regardless where we've come from, they got to sell, and they not only sell, but they flip short, or they go long, or they go from short to long in a matter of days without even, like, it just doesn't matter. You ever seen those CTA guys that certain levels where there's 28.75, then they have to flip long 100%?
Yeah, I've seen those stats. I don't know how it all works, but
it makes moves faster. It's what it does.
And not only that, not only does it make a move, but sometimes you can feel, even now with all the algorithm, you can feel sometimes where you have a forced move, where things are being forced. Whether it was a TVIX going to 1,000 Tesla or Telray or beyond, you can feel that's being forced.
Well,
it's not
I even say it. I'm like, someone's blowing up. We'll find out in a couple of weeks who it was.
Right.
I say it all the time. Like, oh, someone just blew up.
Yeah. All right, so let's wind this down, John, with some sports talk. Are we getting sports this year? What are your thoughts? Baseball, football? I mean, I know you're in touch with a lot of you have a lot more resources than we do. What are you hearing?
I don't know that I do, Joe, but I do think we're going to have football. We may have basketball down at Disney World, and with no crowds, sadly. But at least it's a step back, Joe. But I do think we're going to have football. I mean, I might be way too optimistic, and maybe we don't. But what I know is that millennials, and this is not about the sports question, Joe, but it's about when Tillman Fertitta asked the question, look, I've got all these restaurants. I own Landry's. I own Mastro's. I own Morton's. He owns all these places, right? Bubba Gump Shrimp.
And the Houston Rockets too, yeah.
And the Houston Rockets.
Right.
And he's saying, I worry that, it's smart to worry. Tillman's a smart guy, so I'm not mocking him. He's a friend. But he says, I worry if I open it up, are they going to come? And my answer is, you open anything, Joe, people will come. If you opened the casinos, which are opening up this weekend in Vegas, some of them, are already starting to open. The big ones in Vegas are starting to open this weekend.
Yeah, Wynn opens June
4th. Shocking that Jon Najarian knows exactly when Vegas is opening.
Right. Well, people will be there, and to quote Ricky Sandler, who I still am trying to get, other than just on the halftime, I want to talk with that guy.
Yeah.
They will rage in Vegas.
I just want to party with him in Vegas. I don't want to talk to him. I just want to hang out with him in Vegas.
It will absolutely rage, guys.
Let me ask you, John, if the Bears are playing the Packers tomorrow, are you there at Soldier Field? Would you go?
Oh, yeah. Now, but I'll put it with this caveat. Yes, I will. But if I lived in a home with somebody over 70, pre-existing condition, diabetic or obese, if I lived in a home like that, I wouldn't. My family isn't that. So luckily, like you guys, I think in other words, either multi-generational, Joe, or one of those pre-existing things, then I would not, because I could bring it home to that person. And I'm not that guy, because those are the people at risk. The rest of us are not at risk. The rest of us, it's like that small.
He's a doctor. Brother. He's Dr. J.
Amen, brother. Like I agree. I agree.
Ever that we're going to stay locked down. There's a Nobel Prize winner, guys, out at Stanford. His name is Michael Levin. He did a great. I watched this 1 hour and 11-minute video of him talking with a guy called Fat Emperor on Twitter. He's got a podcast. It's called Fat Emperor. So anyway, I found it, watched it. Michael Levitt said, the only people you save, other than, like I said, those people I described that you don't want to infect somebody who's vulnerable. But the only people you save staying indoors are yourselves. And that's, you're not going to die in a lightning strike, car accident, or motorcycle accident. He said, that's all you save. Other than that, it makes no sense for healthy people not to be outside and not to be even in groups, Joe. But again, if you're going to bring it back to somebody that you could infect, bad idea. I'll leave it with that.
Okay. I personally think if they don't have football, you're going to see riots. That's my personal feeling. You know that movie Concussion that the NFL owns a day of the week? That's pretty damn accurate. And if you don't have football, people will riot. I know the schedule's out. JC, you're the baseball player. It seems like they don't really care about baseball. I don't even know if they're. I mean, I know hockey, NBA's talked about satellite. And baseball doesn't seem to be ready to go. Or I don't think that many people care, unfortunately.
Zor's like thinking to himself, Fahmy, JC was a pitcher. He's not a baseball player.
and Zor's the A-Rod stunt double. I get it. So he has a vested interest in.
Listen, man, I would love nothing more as far as I'm concerned. For me, the perfect day is waking up, watching football, eating some wings, being with friends and family. You know, I mean, that for me is as good as it gets. Like that's what it's all about. That's why I work hard. You know, so that my folks could be over watching a Hurricanes versus FSU game or something like that. Are you kidding me? Those are the best days of my life. So the fact that I don't have that to look forward to. The Dolphins and the Hurricanes both have a quarterback, and there's no football. Like, of course, you know.
No, I hear you. You had me at wings, so I hear you on that one. Any final thoughts? We're going on at about an hour here, so we can wrap it up soon. Any final thoughts, words of wisdom on the markets? We'll just go around.
What are you buying, Fahmy?
What am I buying? I don't know. It's been a good run. I've actually been lightening up, to be honest with you.
Some junky software stock.
My words of wisdom is just less news, more price action. Pay attention to what the big institutions are doing and shut off the news. It's going to really mess with your head. So that's.
How do you guys feel about cash? Big cash positions. How do you guys feel about that?
I'm not in it.
You're in.
Yeah, I'm in. In stocks, not in cash.
You like that?
My trading strategy is so short that's irrelevant. It could be large today and very little tomorrow.
I don't mind using some short-term cash, but for longer term, I agree. I mean, what are you going to get? 7 cents on interest? It's not really worth it.
Leverage that's actually long all day, baby.
That's why I think you see the sector rotation when they do come out of stocks. What are they going to? I mean, like not too long ago, you get 4 or 5% on your cash, but now that you get shit, you got to put it into. Who cares if it's in dividend names or utilities? At least you're getting something.
Who's getting 4 or 5% in cash?
No, I mean not too long ago. Whatever, 10 years ago, whenever it was.
I was gonna say it's been a long time.
Well, I don't know. Maybe I'm just.
Can we end it with the GOAT, Jordan or LeBron after seeing The Last Dance? Joe.
Jordan.
John.
Jordan.
JC.
Jordan.
All right. There we go. That's a good way to end it, guys.
Thank you.
Hey,
great to be on with
guys.
You guys.
Thanks. Cheers, guys. I appreciate you guys being here. Great market talk. Let's do it again soon. Stay safe, and good luck to everybody who's watching. Good luck trading.
Rock and
roll.
roll.
Right. Thanks. That's right. Thank you.